We as a mutual fund distributors and our client as an investor, we are so obsessed and so much giving emphasis on the returns which our investments are generating that we often forget the most fundamental rule of creating wealth, which is investment rate. And in this video, I'm going to touch upon this important concept of investment rate vis-a-vis rate on investments. It is going to give you a perspective how important it is to look into the investment rate before looking into the rate on our investments. Then I'm going to show you how to optimize both your investment rate as well as your rate on investments, which is going to help you as well as your client to build long-term wealth for themselves. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of mutual fund distributors who are determined to change how India invests. So let's start with some simple definition first so that you are crystal clear what I am talking about. So when I'm talking about investment rate, what I mean that first we need to understand and make our client also understand that the amount of money which they are going to put in to create wealth is the most critical part of wealth creation, and that I call as an investment rate. So you will have one active income, your client will have an active income, and the expenses which they are incurring on a day-to-day basis minus whatever is left, if they are putting that money into savings or investment, can be defined as investment rate. So the idea should be to sensitize your client on this concept that first they need to work hard on their savings or investments rate. Now coming to the rate on investments, which everybody is so bothered about, which scheme is giving how much return, which asset class is giving how much return, which scheme is going to perform well, which company's mutual fund scheme is going to give them highest return. We are going to put lot of energy, lot of effort in those things, often forgetting that that is not in our control. Can we have control on the returns which any asset class investment vehicle is going to generate in the future? We don't have that. But what is in our control? In our control is the investment rate. How much I'm going to earn, how much I'm going to spend, and what is I'm going to save. So if the control is with us on the terms of investment rate and not on rate on investment, my suggestion to you would be you need to make yourself and your client aware that we need to concentrate more on investment rate vis-a-vis rate on investments. And I'm going to give you some cool tips which is going to help you in optimizing both. Let me give you a simple example which is going to clarify you why I am emphasizing more on investment rate vis-a-vis rate on investment. Let's assume you have say 1 lakh rupees which you are going to invest, and you have done too much homework, you have selected the best scheme and that scheme has given best results. Let's assume 100% return. Now, after a say 1 year time period, that 1 lakh after getting 100% return is going to give you 1 lakh rupees of profit. Now, let's take another scenario. In this scenario, you have 10 lakh rupees and you are investing in a portfolio which is going to give you say 10% return. So after a year's time period, that is going to give you again 1 lakh rupees. Now the question which you need to ask and make your client understand, what is the feasible rate which you can get on your investment, whether it is 100% or 10% year on year. I think now it will be crystal clear for you as well as for your client to understand that first they need to work upon what is in their control, which is investment rate and not rate on investments. If you get any abnormal return in a shorter period of time, it is going to prompt your investor to take irrational decisions in terms of buying anything which is not required for them. So I hope now you are clear what I am talking about. Now let's talk about how we should be increasing our investment rate, because that is the most important part of wealth creation journey. I'm going to give you some simple examples which is going to make you crystal clear that how it is going to work out. So the first thing which we need to do is we need to understand that from the very beginning we should be concentrating how we are going to spend our money, how we can increase our active income. Now, creating passive income is going to take time, but enhancing your active income from your profession is totally upon you. So I want you to make your client realize that instead of chasing returns from their investments, they should be investing in themselves, in their craft, so that their active income can take a high growth path. And if that is the case, that is going to be a game changer for them. Another important thing which I would like to discuss with you is this. If your base is very small because you have not concentrated on investment rate, then what is going to happen? It is going to take longer time to create wealth for themselves. Now let me give you an example. Suppose you want to accumulate say 1 crore of rupees. Now, if you are going to invest 1 lakh rupees per year at a rate of say 10%, it is going to take 25 years to build 1 crore of coppers. Now, if you're able to understand this, let me show you a calculation. The calculation I'm going to leave in the description also so that you can judge yourself. So if you look at this chart, I have created a chart where if you are investing 1 lakh rupees per year at a rate of 10%, it is going to take 25 years to get your first crore. Now just increase this savings rate to say 2 lakh rupees per year. It is going to take only 18 years to get your crore. Now that's what I am talking about. Instead of concentrating too much on the rate of investments, if we are able to make our client clear that if they are going to concentrate on investment rate, their wealth creation journey can be fastened at a very rapid pace. At the same time, I would like to highlight you this. The first 50 lakhs of wealth creation, if you are investing 1 lakh per year, is going to take 18 years. But the next 50 lakhs is going to take only 7 years. This means again the validation of the fact that if your savings and investment corpus is big, the wealth creation is going to be fastening at a later period of time. And if you look at the example of 2 lakh per year, the first 50 lakhs is going to take only 13 years. So 1 lakh per year is going to take 18 years to accumulate first 50 lakhs. Whereas 2 lakh per year with the same investment rate, you are going to get the first 50 lakhs in 13 years only. So this is what we need to make our client realize, that the more they are able to save, the more wealth creation is going to happen for them. And that's what we need to make our client realize. And for that, I told you the first hack is you need to make them aware that they should be concentrating more on working upon increasing their active income. If their active income is going fast, it is going to help them in build wealth at a reasonable rate of return. So instead of going through a hackle of selecting the best scheme, daily monitoring it, if they are going to invest that time, that energy in increasing their skill set so that they can earn more from their profession, their wealth creation journey will automatically will be taken care of. Now, how to enhance your active income or your investment rate? I can suggest they can automate also to a large extent. So systematic investments can be a good tool so that automatically on a predefined date, their investments are going through. They don't have to worry about or they don't have to take decisions as when and how they are going to invest. They can also put up a rule according to how they are going to be spending the earnings they have. So they can define 60% they are going to spend in households, 20% they are going to invest. And if they are having those kind of rule-based following of their income and expenses, I think they are going to build a healthy investment rate for themselves. Most important part, you need to make them aware that this is a journey. It is nowhere getting rich quickly scheme. So they need to give sufficient time. The only way they can shorten the wealth creation journey is by increasing their investment rate. Now we have talked in detail how your client should be concentrating on investment rates so that they can build their long-term wealth. Now let's talk about rate of investments. Once your client is sufficiently aware and has been concentrating on investment rates, how they are going to optimize their rates on investments. So for that, the first rule should be they should be doing a goal-based investments. Purpose is very, very important because most of the time investors are not able to continue in their investment journey for the desired period of time. And if they really want to change that, they need to understand that they need to invest with the purpose, then only they are going to reach their desired destination of wealth creation. And once they have goal-based investment, then they should be doing a proper asset allocation. Don't chase the returns. I often see people have multi-scheme portfolio and not multi-asset portfolio. They need to diversify their investments so that they can get the best risk reward return from their investments. Diversification is key, and in that asset allocation should always be kept in mind. Now I am going to give you some simple insights which is going to help you as well as your client take a right path in wealth creation. I am going to give you two rules which if you and your client is going to follow, they are going to have a very good wealth creation journey. So the first rule which I want you guys to realize and you make your client also understand is that they need to make sure that the yearly contribution they are doing for their investment is equivalent to the returns generated by the corpus which they have accumulated over a period of time. If they are able to achieve that milestone, the real wealth creation starts from there. So you need to make aware your client that we need to be accumulating that much corpus where the passive income or the income from those corpus is equivalent or more than the active investments which they are doing for their wealth creation journey. The second rule which I want you and your client to achieve or you are going to tell your client to achieve is to have a scenario where the income generated by their investments or their passive income is more than their active income. So if their yearly income is say 10 lakh rupees and their corpus is generating 10 lakh rupees passive investment or return from their investments, then they have truly achieved the financial independence. Because now they don't have to work. They can be on their own terms. They have full control of their life because whatever they were earning from their profession, that is automatically generated by the assets which they have gathered over a period of time. So if they are able to achieve these two milestones which are going to come in conjuncture, I am pretty sure that they will have a very healthy financial life. So the first milestone which they need to achieve is to generate income which is more than what they are contributing to build those assets. And the second milestone which is going to give them financial independence is the returns or the passive income which they are generating from assets which is more than what they are earning on a yearly basis. And if you are able to make these two milestones clear in your client's head, I have no doubt that they are going to align their investment, savings, earning in that direction. I hope I have given you some good insights which is going to help you handhold, guide your clients to a better financial future. In case you like the content, I would love you guys to subscribe to the channel. I want you guys to hit the subscribe button. I want you guys to please comment in the comment box if you like this content and what was your biggest takeaway. Thank you for watching. I'm going to meet you next time. Till then, please take care of yourself. Grow every day. because growth is going to propel you to the new heights of achievement. Thank you very much.